But I completely flipped it on its head and I moved over to negative risk reward scalping. Specifically, I'm looking for anywhere from 5 to 10 points on NQ. It's a direct correlation. As soon as I shifted to that, I just feel like a lot of opportunity opened up. If you want to get a quick payout, I think Topstep is like the easiest firm for a quick payout.
Some of the biggest payouts that are verified are ICT traders. So do you think that ICT actually is the secret strategy for more prop firm payouts?
I do think the scalping model has really been what saved me in these types of conditions, because I can scalp off of a really low time frame range. So I think negative risk reward actually is the ideal way to trade prop firm. The best way to put it is that trading profits come in disproportionate waves. So, and you need to be ready to understand that.
Traders, welcome back to the podcast. Zach, I was just saying before we started, the last time you and I sat down for a solo podcast, we were talking about your 54K in a year in payouts and how much you spent to make that much and what firms you did it with. And now we're sitting down again to celebrate the 30K in payouts in a single month, bro. So first, congrats on that, dude. And congrats on becoming a new dad soon. So a lot of big changes, bro. Stepping up in the trading, stepping up in the fatherhood, bro. How you feeling?
Thank you. Really appreciate it, Austin. And yeah, man, a lot of changes happening in my life right now. That was my biggest month yet so far. So 34K in payouts total. Before that, it was really hard for me to crack the ceiling of getting past 10K a month. I had multiple 10K months, but I just could not get through that ceiling. There was something so psychologically hard about it. And honestly, I think all of the changes in my life, I think getting ready to become a dad probably played a major factor in finally giving me that motivation to like push a little bit further,
What are you doing differently to go from 10K months to now 34K in a month? Are you buying more accounts and failing more accounts to get more payouts, or was there something different that you changed?
Yeah, so I have very specific things that I've changed. And funnily enough, I've actually bought less accounts in this cycle to get to the
Really?
34K payouts, significantly less.
Wow.
The thing that really shifted, that is like a clear distinction, is going from using a high risk reward model. So, a lower win rate, 25% win rate, average R multiple of 3 to 4. That was kind of how I did everything. That's how I traded last year. And I did find my first profitable year last year with that type of win rate. But I completely flipped it on its head and I moved over to negative risk reward scalping. Specifically, I'm looking for anywhere from 5 to 10 points on NQ. I get in, I get out. And I mean, it's a direct correlation. As soon as I shifted to that, I just feel like a lot of opportunity opened up.
Okay.
That is
So
it.
when you is it negative risk reward in the sense that like you basically find the direction. You're like, okay, we're long bias. Let me throw in a bigger stop and try to get a little bit of pop out of this. Is that as simple as it is, or how much more detailed can we be with that? Because it's
Yeah.
gonna,
So
people are gonna be upset when they hear you say this is a hot topic, the negative risk reward. You are, dude. You tweet some of the shit I see, and I know you tweeted to get everybody going because it's gonna piss people off because
oh,
it
yeah.
goes against all the conventional trading wisdom.
It really does. It completely does. It flips it on its head, honestly. The thing is, I haven't changed anything about the concepts. The way I trade, I'm still using ICT. I'm still using volume profile. I virtually have changed nothing except just looking for small price movements. Obviously, the way I analyze price action is different because I'm a lot more focused on just like exploiting that low time frame volatility. So, for example, when I was trading with the high risk reward model, in order for me to actually make that profitable for the day, I would need to properly analyze and capture the daily expansion of the day. So I would, for the most part, have to get the directional bias completely right to make money because I'd be looking for anywhere from 50 to 200 points sometimes on NQ, depending on the setup. With this, I'm a lot more focused on what's happening right then and now. So if I am in a 15-minute uptrends, I still know where we are on the 4-hour and the daily. But if we're in a 15 and 5-minute uptrend and the 1 minute is aligned with that, I mean, really simply, most of the time, all I'm doing is trying to spot out a fair value gap, whether it's on the 15, 5, or 1 minute. Even a 1 minute will work. And I'm setting a limit order. So that's one difference too. I'm using limit orders to get into my positions. And I mean, most of the time, all I'm doing is anticipating a small reaction inside that key level with a limit order set so that I kind of get the price on the downtick. If we're taking a long, for example, I get filled, and then I could really just rely upon the intraday volatility to give me that 5 to 10 points on NQ. I mean, I'm sure everyone knows watching NQ, you could hit 5 to 10 points in a 1 minute bar over and over and over again. Yeah.
Right.
Just like base hit, base hit, base hit.
Okay. Now, how many trades a day is this giving you? Because like before with the high R multiple strategy, you were having to take a lot of trades. Are you still taking that many trades, that many entries? Hey traders, I want to take a second to thank our sponsors. First, Top One Futures. If you use the code ASFX, that's going to save you over 50% on any account type with Top One. They are currently offering the cheapest instant funded account in the game. So if you want to get funded without having to jump through some crazy hoops or pass some crazy challenge, the instant funded accounts with Top One Futures are exactly where you need to go. For $290, you can get a 50K instant funded account that gives you $2,000 of drawdown with the potential to take a $2,500 payout on your first payout. So you're flipping $290 into a $2,500 payout if you can follow the rules and hit the $3,000 profit target. Now they have larger accounts and smaller accounts. Head to their website, like I said, with the link in the description, and you can check out all the information about Top One Futures. Having paid out already 14 million, almost 15 million to traders, they are the one-stop shop that you need to get funded, stay funded, and get consistently paid out. TradeZella is the second sponsor for today's episode. Use the code ASFX to save 20% on their journaling software. If you're looking for a one-stop shop for backtesting, journaling, and tracking your trades, TradeZella is it. They will provide you with the Zella insights and the reports that show you exactly what you're doing well and what you need to work on. You can tag your entries, you can tag your setups. Everything you do can be tracked in TradeZella, now using their progress tracker. So use the code ASFX, click the link in the description, and now let's get back to the podcast.
No, honestly, I'm taking way less because if I take 2 to 4 wins, like 4 is like my max. And I could actually talk about that because I actually decrease my trade frequency as I'm getting further in the account. We could talk about it specifically with the Tradeify payouts I took. But yeah, max is like 4 trades. Like it's so my the amount of trades I take has gone down dramatically because before I would have to take paper cut after paper cut after paper cut
to find that sweet spot. Yep, I remember. So then let's get into it. Talk to us about, like you mentioned Tradeify already. Some of the payouts came from them. I know some of the payouts came from Topstep. So you're trading multiple firms across multiple accounts. Is that 4 trades across all of the accounts in total, or is that 4 trades per account per day? How are you like choosing to break it up? Because I think a lot of people, you've seen this, I'm sure, they trade with multiple firms, but the approach is different. Some days they'll trade Tradeify first, other days Top One first, then they'll put more size in this account and this account not. So like they're kind of all over the place. So what's your approach to managing it when you have different platforms to execute on?
Yeah, it's a great question. So I just keep it between the firm. So I do copy trade, but I copy trade between each firm. I'm not one of those guys that has 50 accounts linked with a sinker and is taking, one trade for 5 points on like 50 accounts. It's not what I do. I break it up. So, I spread out my risk a little bit. I'll trade my Tradeify accounts, do whatever I got to do there, try and make some money, take some trades. If I make profit or if I hit a daily loss, whatever the case is, if I still want to keep trading, switch over to the other accounts. So right now, yeah, I'm just trading Topstep accounts and Tradeify, and I'll just go back and forth.
Do you find that one of them is easier to take payouts on, Topstep or Tradeify?
Yeah,
you've taken payouts from both of them before. I mean, you've been trading with Topstep for a long time.
Yeah.
So do you have a preference? Tradeovate over Project X? Does anything there play a factor in it?
Yeah, 100%. I mean, I'm a Tradeovate guy. I love Tradeovate. I just think the execution is a bit more smooth. I think you can get a little bit of spread and slippage with Project X that gets a little dicey. There's, sometimes the platform freezes. We all know about the Project X freezes. Those are things that I personally just don't like dealing with as much. And the other thing, I don't know what it is, man, but Project X feels a little bit more like a video game. Like the interface to me just feels more like game like.
Very basic. Yeah, yeah, yeah.
I don't
Tradeovate
know
seems
how.
very complicated in some ways too. To like
Yeah,
a novice person would see Tradeovate and be like, "Oh, this is complicated." I think.
yeah, you're probably right about that. So that's more of just like a vibe thing. But I just personally like I like seeing my trades on my trading view chart, you know. But either way, when it comes to the platform, both of them are great platforms on a whole. Like they work great.
Yeah.
Obviously, with Topstep, you have to use Project X. So I've been trading with Project X, and yeah, I don't mind it at all. But if I have the choice, I'd go Tradeovate for sure. But
Well,
in regards to the payouts, I still think Topstep is the easiest firm to take a payout from.
really?
Yeah. Yeah, absolutely. I mean,
Why?
5 winning days of $150. You can withdraw into your buffer. There's no profit target. If you want to get a quick payout, I think Topstep is like the easiest firm for a quick payout. Not Tradeovate, Tradeify, totally different. I mean, I trade the big accounts, so I go with the 150Ks. I like to have that extra drawdown. I need to make 9 grand before I can take my first payout of $3,000. You know, so it's just going to take a longer amount of time. You have the 20% consistency rule. Top step, there's no consistency rule. I could have one outsized day, put in my $450 winning days, and I take a payout. And that's what I did on those last two payouts. I withdrew like about 10 grand. And that's what I did, man. I mean, my balances never went like above $4,000, but I don't care. I
Really?
just withdraw into the buffer. I'm just like, I could take 10 grand out in 2 weeks. I'm just going to do
Yeah,
it.
yeah. Why do you think that is? Do you think it's because of your conditioning of like when you started with prop and started with top step and like you're just used to it? Or do you think that Tradeify's rules and stuff just favor you having to trade the account longer or a mix of
Um,
both?
I just think if we're talking about the simple facts that like the easiest and quickest way to take a payout, I just think it's Top Step for those reasons. I actually love Tradeify and some of the other instant funded firms. Top One, there's a bunch coming out now, but they actually help you a lot. Like with my Tradeify accounts, I've taken 4 payouts, so I've had 4 payout cycles on my accounts, and they actually, in a weird way, even though it's harder to get to that first payout, they kind of help you because I need to make a reasonable sized buffer before I can take out $3,000. I need to make 9 grand, take out three. Now I have my entire drawdown that I was initially given, right? With Tradeify, you're given like 6,000. Then I need to make 4,500 for the second payout. And then it goes down. And by the third and fourth, you only need to make 3,000. But it actually, they kind of force you to build a bit of a buffer in that account. Like right now, I've taken 4 payouts and my Tradeify account balances are sitting at like $10,000 of profit total for each account. So like to make another payout, I got to make 3 grand before I lose 10 grand. You know what I mean? It's like it becomes outsized once you build up a buffer.
Once you build up the buffer. Now,
Yeah.
is live in the cards? Did I see? I feel like I saw something about you getting called up to live. Is that happening?
So I'm just assuming it's going to happen because in their FAQs, they say on your fourth payout cycle, you will be reviewed for live. But I started talking to some people, and that's just when they start looking at you. So
Got it.
good. There's a good chance I got to make at least one more cycle. Most people I've heard it's like on cycle number 5. So maybe after this next one, I'll get moved to live, and I'm cool with that. I'll take another 7 grand payout before you want to move me to live.
A
I'm fine.
hundred percent. All right. So now for the guys that have maybe never taken a payout, as someone who has taken payouts from Forex firms to futures, you've taken payouts over years now. So this is not new to you. What advice do you give to the guys that ask you? Like you get hit up, I'm sure, on Twitter all the time. They're like, yo, what advice do you have for me? I've never taken a payout before. What's been your go-to one-liner of like, hey, if you've never taken a payout, start doing this. This will help it. Is it a certain firm that you're pushing people towards, a certain account size, a certain strategy? Like you mentioned the limit orders over market orders. What would be like some of the go-to advice now for that first payout?
So I'm not a big one-liner guy, but I could give my general thoughts. I mean, number
Okay.
one, I do think the bigger accounts are going to help most people. You know, there's a big debate on that. 50K accounts, it's an easier profit target to drawdown ratio. It's all true, but there's something about a $2,000 drawdown. It's just too tight, and most people do not follow the rules. Like if you want to trade that type of account not aggressively, and trade it safely, bro, you're trading NASDAQ, you need to trade like 2 micros, like
Right.
max position. It's just so tight. So,
Yep.
I mean, I've looked at my previous payouts. I've taken like one payout from 50K accounts in my life. I was
Really?
looking at this recently. Yeah. Funnily enough, it was Topstep 250K accounts that I got for like that. Remember, like last year, they were doing $1.50 for the
Yeah.
50K accounts. It was those
Yeah. Yeah.
accounts. So I somehow got a payout from those, and that was pretty
Okay.
tight. But other than that, man, all of my account payouts have been from the big account sizes.
So your advice is around having more drawdown. You
I think
think the
having more.
key
I don't think it's
is
the key, but I
okay, but
think
it
it's
plays into it. You need the
yeah,
more drawdown. You're shifting towards like less trading, higher win rate, negative risk reward, then larger drawdown. So putting all these puzzle pieces together to paint the picture of what you're doing that's leading to the payouts, it's all these things. It's not one of them, right?
yeah,
So
exactly.
the position size then on these 150Ks, what are you usually throwing? Are you trading minis or are you trading micros?
Yeah, so I'm trading minis, and this actually goes towards your previous question about like what are some key things to get payouts. Um, I think negative risk reward for prop firms actually is the ideal way to trade prop firms. Now that's different from a personal account. A personal account, I actually think maybe going with a higher R multiple, lower win rate could actually be more beneficial for personal capital. But with prop firms, you are given such tight drawdown restrictions. You have trailing drawdown you need to get through. They really reward a stable upside equity curve. Prop firms do not reward volatile equity curves because you just don't have the room for it. So the best way to go about it, and this is just personal experience, is high win rate, low R multiple. Just base it, base it, base it, base it. Just gradually build your account with a higher win rate trading model because the prop firm is just not going to reward you taking, losing half your drawdown and then hopefully getting that big move to like swing the equity curve back up.
Especially with consistency rules. Like
And with
consistency rules almost kill negative risk reward trades because those 6-to-1 winners don't matter as much if it messes up your consistency rule. So it's like a consistency rule to me almost requires you to trade a high win rate strategy, you know?
yeah, no, 100%. 100%.
Why do you think people are so pissed off when we talk about negative risk reward? Ike, you, me, there's a couple of us that have been talking about. Zack talks about it. Why does it bother them so much? Like, why do they care? Why are people so married to the idea that that isn't profitable? And it's always people that are not profitable traders that speak on that.
Yeah, yeah. Well, first off, shout out Forex Ike, man, because
Shout
he
out
really
Ike, bro.
helped me. Shout out Ike, bro. He's the man, my fellow NYC brother.
Yep.
He really helped me realize this. I think what it is, man, is we're taught these certain things that are like from day one. Like if you go to any trading course, like 9 out of 10 of them, one of the first things they're talking about is risk reward. And it's so intuitive. It makes perfect sense on the surface, right? You're like, well, why would I risk $200 to make $50 or $200 to make $100? I'll risk 100 to make 500. That makes more sense. That's what I want to do. Like it's intuitive. It makes sense on the surface, but bro, like the reality that like I don't know the exact percentages, but if you have to find the percentage of like how often are you going to get a 1 to 5, maybe 15% of the time you're going to win
Right.
15% of the time. Now if you have edge you can bring it up, I totally understand that, but even with a high R multiple you're just going to take those losses, and it ends up equating to you having like a 2R, right? Because if you take 3 losses to get a 5R, okay, you made 2R on the trade.
Right.
You just
Right.
made it more complicated for yourself. So
Math is math.
yeah,
It
math is math.
it's like in gambling when you do like a sports bet, everybody wants to bet 100 to make 500. They don't want to bet 100 to make 60. But the 100 to make 60 is going to win way more than the 100 to make 500. It's the same exact idea. It's like a gambler's mindset versus a trader's mindset, like a probabilities in the trader mindset versus the, maybe they're looking for like expectancy, if that's the right word, but I don't know if that's the right word on the gambler side, where they're like the same thing as like the baseball player. It's like he's hasn't hit in 4 games. Well, he's due. Well, not necessarily, bro. Like not that's not how statistics work, right? So yeah, it's very interesting to look at it from that perspective. When you think about strategy, like you've seen and you've had guests on stream now that trade similar to you, you've seen the way I trade now for a while, like the way we do with VWAP. Do you feel like strategy is the determining factor for some of the prop firm like success that we've seen? Because some of the biggest payouts that are verified are ICT traders. Guys like yourself, a lot of what you do is ICT based. So do you think that ICT actually is the secret strategy for more prop firm payouts?
I don't think there's any secret strategy, but I do think it's undeniable that ICT concepts are a great way to analyze price action and trade. I just think it's undeniable at this point. You have so many ICT traders that have taken massive payouts. It's just true. So while I don't think it's like the only strategy or the best strategy, I do think strategy is a big factor. Like a lot of people love talking about like keeping things as simple as possible, right? And I used to subscribe to that, and I think I'm kind of getting away from it because when you're trying to sell a course, you tell people, I got the simplest strategy for you, bro. This is all you got to do. 2 steps, buy this break, and you're done. You'll make $1 million. That's what people want to hear. The reality is, I think it gets convoluted because I think the reality is technical analysis is complicated. If you want to have a comprehensive view of technical analysis, it is complicated. ICT helped give me a comprehensive way to analyze price action. Now, it's not the only way, but it's all just language, right? ICT gave me a way to interpret price action, in a way that's coherent for me. But I'm telling you, bro, I spent probably thousands of hours watching YouTube videos on ICT videos. I got a really comprehensive view of a way to analyze price action. Then, once I have that comprehensive view, I simplify. My model becomes a simple trading model. But the thing is, I can't tell someone, like, my model is very simple. But in order for you to execute it properly, you need to have that comprehensive view first. Like, you can't go simple first. You need to like get down in the dirt and learn. And I think that's where it gets convoluted because I think simplicity is key, but not until you have like a real comprehensive view.
In the same way that like you can't be a discretionary trader until you have some type of foundation of understanding of what's going on, right? Like discretion is only applied correctly on top of a foundation. Otherwise, you're just gambling and guessing. So it's the same thing. You need that foundation of understanding. Is it like as simple for people like because there's so much ICT shit on the internet now, bro? Like what do you think is the inevitable outcome of all these people making YouTube content, sharing their models, sharing the way that they trade? Like, is that actually going to help people trade ICT better, or do you think that will confuse people?
Yeah, it's a good question. I think it depends. I think if you're looking to get into ICT, um, you could go straight to the source. You could learn from ICT's videos himself. I mean, he has an entire discography completely for free up on his YouTube, thousands of hours of educational content. Funnily enough, I have not watched a single entire like ICT video in its entirety because I just don't like his teaching style. It doesn't resonate with me. People love talking about how like you have to listen to 4 hours for him to drop a golden nugget, and then like there's memes about it. You know what I mean? And that's cool, man. But I don't got that much time. Like I
Right.
can't be doing that. So his style actually doesn't work for me. I've learned from other people. I think if you're going to do some research on who you should learn from, you could always start with ICT because you're going to get the most concentrated information. But if you want to study around, you just got to look for people that are taking real payouts. You know what I mean? You got to make sure that they're verified in some way. And I think as you learn with ICT, you start to realize who's doing it better and who's not. But the biggest thing, if you're brand new to ICT, you just need to start. So just start watching videos. That's how it was for me. I didn't have any like this perfect plan on how I was going to learn it. I watched a guy's video here. I learned about fair value gaps there. I went, okay, I like fair value gaps. I'm not too into the breaker blocks. Order blocks are cool. And you just start to pick apart what works. And that's how you build your model because, I'm not one of those people who thinks that you can copy someone else's model like um, cut and paste. I just don't think that's how it goes. I think you need to have a comprehensive view and then boil it down to some of the key things that are going to work for you.
Well, like you said, you should only be talking to people that have taken payouts anyway. So your 34,000 in payouts in the last 30 days warrants us to discuss the course that you're building. So now that I've been putting you through the ringer, having you make these videos, how has that shaped your trading? I don't think it's a coincidence, bro, that Evan ran a really, really hot streak last January into Dallas when we had our seminar, and he built Futures 2.0 November, December into January. So he
Yeah.
builds his course, runs a hot streak, crushes it, takes 30 something thousand in payouts. We have you cooking up this course. You happen to take 34,000 in payouts in a month. So I just wonder, is there a correlation between studying your strategy, having to teach it and explain it? Does it actually make you trade it better?
Yeah.
Probably.
Yeah. No, definitely. Super excited about the course, by the way. We're almost done. And yeah, I think that's a good point. I didn't even think about that, man, but 100% because, to build out a course, this is my first one. So I had to really like zoom out and remember, okay, like how do I actually teach someone that knows nothing about this? That was my
Like,
goal.
what will they be thinking? Like, what questions will they have at first? Like, yeah, like, so you're putting yourself in that new trader's shoes.
Exactly. And that was tough for me because usually when I'm talking about ICT or I'm talking
You're
to another
teased,
ICT
right?
trader,
And you're
I'm just like, yeah, yeah,
teased.
that M1 fair value gap that's within nestled perfectly within the order block. And
And then the turtle is souping itself and you don't see it? Like, right.
yeah, yeah, and a turtle soup. So yeah, I had to really like step back and go, okay, how do I teach this to someone who knows nothing? And it definitely forced me to like really get back down to the foundational principles. I talk about that a lot in the course. I go, I'm going to teach you the foundational principles so that you can expand off of this. And I think that definitely helps because it just reminds you what's important, because you can get bogged down, you can get lost in the sauce with ICT or really any strategy if you want to. So, yeah, I think that was a major factor. I didn't even think about that, but it makes sense.
Well, you put it together and you're like, okay, I better make sure that I understand this front, back, left, and right before I start talking about it. And sometimes that even leads us to like doing some deeper research or like, let me see if I can explain this from a different way. I feel like you never really understand something until you get the front and the back of it. You know what I'm saying? Like you have to understand what to do, but also what not to do in order to fully understand something. And I think so far in the videos that you've sent, you do a good job of that. Like you explain to people of like, this is what I mean. Not this, but this. So like I think that helps cut through some of the noise that is seen in a lot of these other ICT concept style courses and videos. So for everybody listening, the course will be posted on ASFX TV with the rest of our courses once it's finished. We're hoping by the end of the year, right, Zach? We said I think by the end of October, if all
Yeah,
goes well, right? That's our
yeah,
timeline.
yeah, October for sure.
Yeah, because we're close. We're already halfway there, so we're close. But I think that like people will quickly come around more and more to courses as they are positively impacted by courses, bro. That stigma that like was there when you and I first started trading of like only people sell courses if they don't know how to trade. It's like if that was true, how would you learn anything? You know what I'm saying? Like someone had to put it in a book, someone had to put it in a video and share it with you to learn. So I think once people are impacted positively by a course, they start to come around to like, oh, I can actually learn new things from things like this. This is amazing. So hopefully everybody here, like even the guys that follow from me with the VWAP will come and see a lot of the concepts that you're talking about are crossing into what we do with VWAP and have actually helped a lot of the guys like Randy, even using POC and value area high and value area low, looking for different levels to align with VWAP. It definitely crosses over and can be helpful, not just be like, oh, this is more information, this is more noise. You know what I mean?
100%. I'm not even an ICT purist. Like when you just referenced value area high, low point of control, that's volume profile. That is not
Right,
something ICT talks about at all. He has nothing to do with
right.
that. That was my own thing. And I think that's kind of the twist that really helps me. I've been using those levels since before I even was trading ICT because they work really well. And I think it pairs with ICT very well. And funnily enough, like I know you've been getting deep into those into the
The
order. What is it?
options levels. Yeah.
Options levels,
Gex levels. Yeah, the
next
option stuff.
zero DTE levels.
Yeah.
And bro, it
Yeah.
just blows my mind. We are finding exact confluences to the tick with like my
Yep.
point of control or like a fair value gap with those levels. So that's where I
Yep.
go back to. There's a bunch of ways to analyze price. It's just a different language, but
That's
you're
all.
you're portraying that, yeah, you're conveying the same message.
So what do you think about the market the last couple of weeks? I mean, we are grinding higher. Has that changed or let me ask it this way. Has your strategy of like the scalpy less than 1R type trading, do you think worked better now? Or do you think that works better like how in February and March when we were moving lower faster, it would perform better then?
So I think, well, first off, trading when the market is grinding up at all-time highs is pretty tough for most people. It's historically been very tough for me, especially when I was trading a high risk reward model. Those types of models work a lot better in not exactly consolidations because you do need expansion, but more so just like we could be in a daily range or like some type of daily consolidation, but still moving 200, 300 points on NQ based off
Sure.
like the 1 hour and 15 minute, and you can catch big moves. When we're just grinding up in one direction, it gets tough because we don't build a lot of structure on the downside that makes it like, okay, this is a clear area to put a stop loss. And then you go, especially when you're trading ICT, you're like, what do I target? Because we like to look for liquidity pools, old highs and lows. And when we're just grinding up to one side, to the upside specifically, I have nothing to target, and it gets tough. I do think the scalping model has really been what saved me in these types of conditions because I can I can scalp off of a really low time frame range. So we could be grinding to the upside on the hourly, 4 hour, even the 15 minute, but I can identify some type of like internal liquidity on the 1 minute range, and I could play that because all I'm looking for is 5 to 10 points on NQ. So
Right.
it works a lot better, but it's still dangerous and it's still tough because if I want to use a really wide stop, the problem with when you're trading all time highs, you have no idea when that shoe is going to drop, and we're just going to go through to the floor,
Correct.
especially off a lower time frame. Because if you're day trading, the market can drop down 100 points. We're still in a crazy strong daily uptrend. It's not like anything changed on the daily, but you had a massive sell off, and then you're kind of cooked. So it's still tough. There's no easy answer, but I do think playing lower time frame ranges, scalping, uh, has been really beneficial for me in these conditions.
What do you see other ICT style traders, not to group you in with them too much, but like what do you see other ICT boys struggling with right now? Anything like on Twitter that you see them constantly posting about and you're like, you would do better if you would just listen and do this?
That's a good question. It depends on the trader. I think a lot of ICT traders have a tough time in these one-sided like daily uptrends where we're making new all-time highs.
Because they're
For
trying to call a top and they're getting smoked because it's just
Yeah,
going higher.
because like one of the main principles of ICT is that it like moves from one liquidity pool to another. That's all the market's
Sure.
ever doing, right?
Right.
But
Right.
if we're just going up, 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 you have like, what are you targeting? So a lot of people get messed up with that, and they start looking for the reversal, trying to call the top. That's a major problem for a lot of people when they first learn ICT, because I don't know why, but everybody watches the 2022 model from ICT on YouTube, and it's just is like it's the one that really blew him up into the stratosphere. And it's like
Yep.
it's a good model, but people get messed up because they think it kind of seems like it's a reversal model, right? Um, and people think that that means they need to always be looking for a reversal. But my biggest piece of advice that I would tell people who are struggling with something like that is remember, you don't need to look for the reversal on the 15 minute. You can be in that 15 minute uptrend, wait for the pullback on the 1 minute, and play a 1 minute reversal in line with that trend. You know what I mean? So you're still
Yeah.
trading a reversal in a way, but it's just, it's all dependent on the time frame. And that's really the best way to trade those types of setups because you're still in line with the trend. You're actually trend trading. If you really want to oversimplify it, like you're trading a bull flag,
Right.
select, pull back, go up. Um,
Yep.
yeah, that would be my advice. Like, don't think that if you're trading the 2022 model or any ICT thing to be specific, don't think you need to look for reversals. Like, man, there's many ICT guys that trade trend continuation only. It's just about how you organize it.
That's good advice because I would agree. That's basically the same thing that I'm seeing when I look on Twitter. Twitter, I feel like has become an interesting place with all this prop firm stuff, bro, hasn't it? With so many prop firms out nowadays. What are your thoughts on just the industry in general from the outside? Because you're not super active on Twitter. You're not on there tweeting 5, 10 times a day every day.
No, not 5 to 10 times a day. I'm pretty active. Like I tweet maybe usually at least once a day. Um, I love Twitter. It's really the only place that you could be a trader. It's tough. I mean, we have Discord, we have like our core group, but you got to admit the drama that happens. It's fun. Like watching Patrick Whelan yelling at someone or yelling at ICT. This shit, it's just entertainment. But I think you got to like people got to remember it's entertainment. It's just it's a way to like make the time go by when you're stuck in a fucking range all day on the markets. You can go
Like
scroll
today.
Twitter.
Yeah,
Yeah,
exactly.
like
Yeah,
that's
I
the
think
main.
sometimes you're right. People take it too personally.
Yeah, dude, way too personally, way too personally. Even like when I made that tweet about negative risk reward, I have people like being like, "Let me find out where you live, bro." Like someone literally said, like, "I know you're in Brooklyn. I'm 30 minutes from you. Come meet me." Like something along those
Jesus,
lines. And I
bro.
was like,
It's like,
Jesus.
God damn, bro. Like, it's Twitter.
Yeah. So Twitter's crazy.
Jeez.
Twitter's a crazy place, man. Prop firms, Proplandia, it's crazy. But it's fun. I wouldn't have it any other way. You know what I mean?
You think a static, remember last podcast we talked about the static drawdown futures account, still not out yet. You think it'll ever happen?
It'll never happen, bro. I've been tweeting about this for like
Why?
two
You think the
weeks.
futures traders are too good and the firms are too smart? Like, why do you think they won't give it to us?
I think that's actually a big factor. It's well known that futures prop firms pay out significantly more to their traders than forex prop firms. I think a big factor is the slippage, slippage and spread. People don't realize you're trying to intraday trade an asset that has spread and slippage. Like
Good
it's
luck,
almost impossible. Good luck, bro. It really doesn't work unless you're trading
especially
on like
scalping.
you can't scalp. You cannot
No, you
scalp.
can't scalp a market like
There's
that.
no edge whatsoever in it. So yeah, they pay out a lot less. Um, I think that's a big thing. So they can offer like $10,000, $20,000 of static drawdown. It's like crazy to think about that. If they offered people that in futures, they'd probably not be able to handle it. But I always said
No.
one way that you can do it. And again, I'm not a prop firm guy. I don't know the risk side, but I always said decrease the leverage. I don't need 15 minis on a 150K account. Give me 5 minis on a
Right.
150K account, but give me $10,000 of static drawdown. Maybe it would work. I don't know. I'm a trader. I'm just looking out for what's best for us.
Dude, I was saying like there should be like let's say like a 6 or 8K max drawdown static, but like a 25K profit target high, make it far. Fine. But if you give me static and you give me 30 contracts or 40 contracts that I can throw, like some serious size, let them go at it. And I'd pay more money for that. I'd pay $1,000 to go try. I'll give you 1,000. You give me 6 or let's just say 8,000 of drawdown. So it's a good return on investment there. But I got to go basically triple the account. And if I triple the account, I should get a fat payout too, fatter than what the current caps are. Payout caps in general kind of suck for the industry. That wasn't a thing, bro. Like literally 2 years
Yeah,
ago, payout caps was not a thing.
yeah. I
Not even
really
a
hate
year ago.
that. I hate the direction it's gone with that. But maybe that's the only way this thing stays sustainable long term. I don't
Well,
know.
I mean, it probably stays sustainable in some capacity because like new traders will want it and it's cheap. But I think more and more we're going to hear people go back to trading personal capital. That's my thought. Is like over time the prop firm thing will get too tight. People will be like, "There's too many rules, too much bullshit. I'll just put $2,000 in my own account." You know what I'm saying? Especially if you're like me, you're buying 50K accounts at $300 a clip. That's a $900 investment. I mean, 2 or 3 goes at that, you're already there. 2 or 3 thousand of your own
Really
money.
true.
You know what I'm saying? I think people are going to do that more. What do you think?
Yeah, no, I agree. I mean, I think if they keep like tightening restrictions, it's gonna lose its edge for the trader. So they're
Exactly.
always going to be trying to find that balance. It might be just like anything else. Like there's going to be a pendulum. Maybe restrictions get tighter and tighter, and then they go, "Oh, people aren't buying these anymore. Let's loosen them up." You know,
Exactly.
it's probably going to go like that. But I still think, I mean, at the end of the day, even with the payout caps, like take Tradeify for example. I mean, I've been trading two of the 150K accounts. I spent like a little less than a grand. I've withdrawn 24K from it in a month. Just off Tradeify. It's still like an insane like risk to reward. It's insane, bro.
Where are you going to get that opportunity?
Yeah, you're not. And if I get, hopefully,
Not.
I get moved to live because then if on top of that, if I withdraw another 7 grand, I'm taking 30K in payouts, and they set me up with like at least a $10,000 live account. I'd imagine that's
Yep.
like you're not. That's insane, bro. There's like nowhere else in the world you can get a return like that. So there's still massive edge in prop firms. There's still you got time to exploit. So just get good at trading and learn how to milk it, man.
It is the best place to learn how to trade for sure. What Back to just your payouts for a second, because I got a couple more questions. What do you want to tell everybody about like the lull in between payouts? Speak on that for a second.
Yeah, that's a real thing. I talk about this a lot. People think that once you reach a certain level in your trading, like, oh, I made 10 grand this month. That means I make 10 grand a month now in trading. I've leveled up to 10K months every single month. And it couldn't be further from the truth, man. This is why trading is so difficult for people long term. And even people who find a little bit of success, they eventually burn out because, dude, it's a tough way to make money. Like, it's so, the best way to put it is that trading profits come in disproportionate waves. So, and you need to be ready to understand that. Like, you can make half of your yearly salary in a month or two. And for a lot of traders, it's like that. It's like the 80-20 rule, right? 80% of your input's going to come from 20% of the output. It's a real thing. So you need to learn how to, first off, mentally deal with that. You also need to be really good at budgeting. And I can tell you, this is year number 2 that I am, my trading profits are covering the majority of how I live. I'm telling you, I've learned the hard way. You need to learn how to like properly budget when this money's coming in. You need to save it. You need to sock it away. You need to do the right things with it and move it around. Otherwise, like you're going to be screwed. You're not Mr. Big Shot because you had a 30K month. That's something I got to tell myself.
Great points. Anything else on just the like maybe speak on just the frame of time between payouts? Because like for me, I've taken payouts every single month this year up until July. And now July and August, I've gone 2 months without a payout. So for you, what was this year like? Was it payout? I think it was payouts in the beginning of the year. And then there was a few months where there were no payouts, right? Like April,
Yeah.
May, June, I want to say you didn't take any. And then it got
Yeah.
back on the horse. So is that what you would tell, like when people ask you, what should I expect? Do you tell them, hey, you might go 3, 4 months without a payout?
Yeah, I think 3 months might be a bit long. So for me, it was beginning of the year.
Yeah,
I
if you
did
get to
pretty
three
well.
months, so if I go another month without a payout, I suck. All right.
Maybe. I think you'll get one. I think you'll be fine. No,
I
not
hope so.
not actually. I mean, it depends. Like if you don't take a payout for 3 months, but you've been cooking up a big one with like 5 or 10 accounts, then maybe it's fine. I guess there's really no exact rule on it, but for me, it definitely was like that. Like the beginning of the year started off pretty strong, and then I hit a lull. I think it was I know April I took payouts. I think it was May and June was nothing, nothing at all. But for the better part of June, I was working up those Tradeify accounts. So
Right.
building that up so that July could be really good. So yeah, it's not a monthly thing. You're not going to make money every month for the most part.
Yeah.
There are people that do.
Especially in
There's
prop trading. Like we were saying about personal capital. If you had a personal capital, like the guys that like Mark Ross and the guys that we have in the Black Shirt Club that are trading personal capital, they take money out every month usually. Like they've taken something out each month. But with prop firms, because you got to build them up, like you said, some of these are 10 trading days, 5 days of 200 this or whatever. So that takes time. You can't just do it in a day and take money out.
Yeah, 100%, 100%.
All right, last question for you, buddy. This has been great. It's great catch up. Well, before I ask you, do you have any other advice you want to share with everybody before we go to our final question?
Honestly, man, not particularly. One thing I could talk about briefly is a way that I've been managing my trades in funded accounts that I think it could be helpful information. I was talking to Rebecca
Okay.
about this because she asked me. Um, so I've actually kind of flipped it around. A lot of people they start off small size when they first start accounts, and then they gradually increase their contract size, their risk per trade as their account grows, right? Like as they grow a balance. I actually have done the complete opposite these last 2 months, and it's been really helpful. And let me explain why. So I started off with these 150K accounts. We'll go over Tradeify as a specific example. I was trading 5 minis per trade, looking for 20 to 40 ticks, which would be about 500 to a $1,000 win, risking pretty much my entire daily loss limit. This is going to be controversial, but I was able to build up my buffer and my balance very quickly doing that, right? And number one, what do you have to lose when you start trading aggressively in the beginning? All you have to lose is your challenge fee, what you put in. Once I
It's already
build
spent.
up, Yeah, whatever I spent. Once I built up that buffer, instead of increasing my contract size, I actually lowered it
Right.
because now I had a $10,000 balance now. Now I'm cutting my size in half, even a little bit more than half, and I just have so much room to work with. If I want to make $500 a day per account, I have so much room to work with. I can move down to one or two minis and do that with a
Yep.
huge buffer. But people do it the
Yep.
other way all the time. I think with prop, you gotta play the prop game.
No,
And I,
dude, I agree with this. This is playing the game. Yeah, it's the same way. Like if I win my first trade, my second trade is smaller. I'm playing with house money. I made money already. I don't want to give it all back. Same concept of like you built up that buffer quickly, and now you're playing with that made money. Make that money. Make the rest of this little bit. Make it work. You know what I'm saying? So I think that
exactly.
that does make sense. I don't understand why you would lollygag around in the beginning. You already spent the money. You already got to pay the credit card or pay whatever. So it's like, let's go, go. You know. But like you
Yeah,
said, you should be budgeting. Everybody should be budgeting, making sure they don't spend more than they can afford to spend on prop challenges every month, tracking this month over month to see, like I was talking about it on a stream last week of just showing everybody. I just have a simple spreadsheet where you track how many accounts have you bought, what happened to them. Like it's super easy to keep track of this, everybody. Don't run from the accountability. I think if you start to take it seriously, like Zach's talking about, you end up with the same results as him, 34K in 30 days, not bad.
you have to track it. If you don't track it, you can get lost so quick in buying challenges. That was, my partner, she helped me do that. She was like, you have to sit down, track
It's
this.
always the women get
Always
you
the
in
women.
shape.
She helped me a lot though because I have a budget now, monthly budget. I can't go over it. Period.
Yeah,
And
spend and then, but then it makes you free to go hard on them too. You're like, okay, I know what I got for this month. Let's go. Let's fucking trade.
especially
And guys like you that know how to trade, it's like, oh, that's like all you need. It's like loading the gun and giving you the bullets already cocked back and ready to go. You know what I'm saying?
exactly, man.
Yeah. All right, dude, this has been great. I appreciate you. I know you're busy with everything, so this is great. Appreciate you giving us the time. We'll have to do a part 3 once the kid is here. Once we get to the end of the year, see how many more payouts you take. But super happy for you, bro. Can't wait for the course to be out so we can feed the streets, feed the people what they want. I think you're crushing it on stream, bro. Crushing it with the payouts. So I'm happy to have you as a partner and have you working with us. So yeah, bro, just big W's all around. Really happy for you.
Yeah, thank you so much, Austin. Love doing these pods with you. I watch every single one, so it's always great coming back, being a part of it, and working with the team is seriously one of the best things I ever did in my trading was being a part of the Black Shirt Club and then starting to work with you guys. Yeah, love all you guys. It's the best.
Thanks, bro. Yep. All right, everybody. We appreciate you listening all the way through. Make sure you're subscribed. We drop new episodes every Saturday morning. But for now, we'll put a pin in it. Zarb, I'll see you in the next one. Listeners, thank you very much. We'll see you next Saturday.
See you guys.